Good morning, everyone. This is Anne Marie. Today's Tuesday, November the 20th, and we're taking a look at SPY. Now, I did adjust this level just before we began. I had it down at this wick. You can see that level from yesterday's SPY video. Today, we've shifted it up just a little bit, but you'll notice we're sitting up above the 200 on the daily. That's the 200 daily. And this is the 50 daily, and so we are up above there. Pre-markets are holding these levels. We're a bit stabilized. This was a very sharp move yesterday. I thought it would take us a couple of days to do this. I got the feeling that so many folks came in day after day and saw that we could not hold the gap up, that they got in front of the short, and then that started a bit of a squeeze event that sort of triggered new levels for entries. Basic algorithms are saying, hey, listen, if we pop up above this range, then we're going to go long into this range until we show weakness. And that's exactly what seemed to be happening yesterday as we continued to climb. Ended on the high, which is extremely bullish. We are holding these levels into the morning, as I said, so watch for us to creep just a bit higher. 38.2 here. This is very typical. Traverse the entire range here between 38.2 and 61.8, and then go right back up to the 38.2. and then hover there before making a decision. That is extremely common. Here's the difference. We've got congestion here and congestion here. So 38.2 is important. That's the 140 level. However, just above it, we have a new state of congestion. And then just above that, we have gaps. Now, notice how, what's the word? Staccato the formations have been, right? Gap, gap, gap. We've got all these gapping events, no fluid motion there, and it's very so I know that's very technical, I know. So what we want to look for is a space where that sort of resolves a little bit. We need for this gapping action to settle down somewhat. So far, not doing it. High level of volatility floating around everywhere. Going to have to live with that, unfortunately. It is what it is. So, that being said, what we look for today is how do we behave at the open around these regions, around this area. If we gap up pre-market, and in the first couple of candlesticks, we can't hold that gap, that's a sign of weakness. Just like if we gap up in the morning and we quickly breach the gap high level, then even though it pulls back, it's probably going to pull back into support. That shows strength. Where could we be possibly going? Hey, as high as the 50 daily is my guess. All right. Now, let's look at the flip side. What if we come in and we lose these levels? What's the trade? We've got gap action that begins here. It's already been filled, but we have a brand new gap here. So chances are very likely that we come in to test that gap. If we hold it, again, more strength or sideways action. If we get the little sideways action, we may be able to play a nice iron condor into the end of these weekly options expiration. That might be a good space. Overall, charts are doing exactly what we talked about, right? We started way up here, somewhere around the 20th of October, started when I started doing the daily SPY, and we said, hey, listen, here's what's typical. We've done exactly what's typical, and we've come into these spaces. We're now bouncing. This is also typical, that we come into these areas. We could breach. We have another formation that we are essentially attempting to build, possibly. We have two things. We either have an ABCD pattern, which means that from this region, we will bounce a minimum of, looks like 21 points from here. 21 points from here would put us at 155. All right? If we don't have that, we could be building another harmonic, which is called a Gartley. Could be building a Gartley, and that Gartley could retrace, this leg on the Gartley could retrace all the way up into here. If it retraces all the way up into this area and then rolls over, say, at the 144, this is the new test down here at 178. Probably going to break down past that because congestion levels look like they're about at 131. So we've got two types of formations we're looking at. Both of those formations are suggesting upside momentum into resistance. So that's what we're looking for. The SMI pointing upwards. My technical indicators that are custom also pointing upwards. So we will continue to breach these levels in all likelihood and move to the upside. Now, again, last thing I want to tell you, we can have a strategy about what we believe the market's going to do, but if we don't have candlesticks that confirm that sort of thing, remember, candlesticks are the price derivatives themselves, and those technical indicators are derivatives of candlestick motion, and so we don't need to really focus on those technical indicators more than we focus on the candlesticks. Focus on the candlesticks first. If you think you are moving up and all of a sudden you start building candlesticks that are giving you lower lows and lower highs, guess what you're not doing? Yeah, moving up. So think through these things. Don't be an automaton about working in the charts. Don't be afraid of trying to understand what's happening. Just dig a little deeper. You don't have to be super smart to do this business. You just have to pay attention, and all of us can do that. All right? So take care, have a good day, and good luck.